name's Greg. I'm a consultant. I'm a principal consultant here at Collectiv.
I do want to start from some basic definitions. Just really, what are we talking about when we talk about financial reporting? So I think the financial reporting is to, these standard practices. And the idea here is whether it's stakeholders or shareholders, it is in many cases a company's fiduciary responsibility to provide financial reporting to its stakeholders or shareholders. So even if a company is not publicly owned, right, traded on a stock market, which is then in the United States governed by very, very specific rules, you're still responsible for providing anybody who has ownership in the company at least an annual financial statement. So this is a responsibility for every company that's out there. And I think a lot of companies are learning how to move from just doing the requirements that either their stakeholders or the SEC requires towards how can we really run our company and make better decisions using this financial information. I personally think that running a company based off of cash flow and P&L and balance sheet is one of the most effective ways, at least for certain aspects of the company. There's a lot of other things that have to be taken into account. Obviously, financial analysis is a little bit less on the human side of business, so it has to be tempered with a grain of salt. But it's an extremely powerful tool to be used with the rest of the arsenal. So the first is the P&L. This is, I think, the financial report. This is a standard accounting statement. Almost every company is generating. P&L stands for profit and loss. So if you look at it, you go and take all of the accounting information, the general ledger, and you break it out and you summarize all of this financial information, starting off with your revenue. So this is how much money are we bringing in the door? And then the next thing you look at is, what were the cost of goods sold? So then at the bottom of that, you have your gross margin. It goes all the way down. It looks through like all the rest of the expenses, and you get all the way to, that's where the term, the bottom line comes from, because the bottom line on your P&L is your net profit. That's how much, retained earnings you have, how much money is going to the bank at the end of this month. And I think what's important to recognize is how many little derivatives and offshoots there are from the P&Ls. You can generate a P&L that looks much more dynamic, that looks much more visually appealing. And really anything that you're looking at that has, full revenue figures, full expense figures, profits, that's really a derivative of the P&L. You're going in and you're taking this accounting information and you're typically displaying it over time. For those of you who are a little bit more accounting oriented, there are things like, quick ratio or acid test ratio that are looking at a comparison of our, current assets versus current liabilities. The quick ratio, for those of you that aren't familiar with, is like a one number metric that talks about a company's ability to pay its debt. So how solvent is this company? And it's a frankly really good measure of the health of a company. So the quick ratio and a couple other ratios that you can generate off of the P&L are really good indicators of the health of the company. So even if we're not going for that giant grid, all of this stuff can be extremely useful. Now the P&L's, I would say, best friend is the balance sheet. So the P&L is for money going in and out, and the balance sheet is for money kind of sitting there, or money that we know we're going to lose. So the balance sheet is a little more static, whereas the P&L is dynamic. So the balance sheet shows, how much capital do we have? Things like, we own the land that our office is on. That would be an asset, right? We have, cash in the bank. That's capital. We know that we have accrued for this big tax expense that we're going to have coming down the road. That's a liability. So the balance sheet is another good way to take a look at how much money do we have, is really the simplest way if we wanted to convert everything to a money value. The next is cash flow. I personally believe that cash flow is one of the best ways to operationally run a business from a financial standpoint. Obviously, there's a lot more that goes into operations than just cash flow and making sure that we have enough money and we're spending it properly. But it's one of those things where if this is not one of the things that I'm using to help make my decisions, I will either get myself into trouble or I will not be growing as quickly as I can. So this is just a must-have, I think, for anybody that has access to it. You really should be, hopefully helping to using that to help you with your decisions. Another one, this is typically a very important one for anybody that doesn't have, kind of like a subscription structured business, and that's accounts receivable and looking at their aging. We can put subscriptions to the side, or we could say like maybe you're a store owner where somebody's not going to leave with their ice cream cone if they don't pay, so there's no accounts receivable aging there. But this is effectively a report that says, hey, well, we did some work for you and then we sent you a bill and it's been like 60 days since paid, and I thought we agreed on 30, so kind of like, where's the money at? And doing that on a large scale basis and looking at these aging buckets, because unfortunately, especially as our businesses get larger and larger and larger, eventually we will just hit the statistical certainty that somebody's going to not pay their bill. And so we need to have the ability to promptly write that off so that we know that that's going to be a loss, and we're stopping spending resources trying to collect it, or maybe we hand it off to a collections agency. These reports are typically a big part of financially managing a company, because it's really the function that gets the money in the door. And the last one, this is one of my favorite financial reports that is not of an accounting bent, not one of these traditional accounting statements, but it is a price volume mix analysis.